It was the second worst day for the stock market this year, and the selling pressure was so intense that trading curbs had to be put in place at the New York Stock Exchange. When the bear stampede was over, the Dow plummeted 226 points, the S&P 500 lost 30 points, the NASDAQ tumbled.
On August 9, 2007, the ECU, the European Central Bank, shut down 3 of their largest banking systems, setting off a chain of events that nearly brought the United States financial markets and much of the world into a financial meltdown. For the next 7 straight trading days, the world found itself in a financial crisis, having to pump hundreds of billions of euros, US dollars, and yen into the market to keep it afloat. Wall Street and the rest of the world watched in horror day by day as events continued to escalate, while at the same time most Americans were painfully unaware anything was taking place. Jesus said he would come as a thief in the night. We are told to watch and be ready. The events of the financial world, August 9th through August 17th, 2007, was a warning and may very well have been one of those defining moments that Jesus said we must watch for. For the next 60 minutes, Tom Carey in his sermon, Financial Meltdown, goes into the day-by-day events of those 7 trading days.
Well, good afternoon, everyone. I don't know if you've noticed in the news events that have recently taken place and how close the United States, and for that matter, many people in the rest of the world in the financial markets came close to a meltdown. A lot of people I talked to about the financial situation had no clue what I was talking about. They understood certain events and they watched news, but the news itself doesn't bring out the importance of what was taking place in the financial institutions around the world that began just a little bit over a week ago. What I want to do today is I want to talk about the recent events in the global financial markets with the 7 days of trading in August. And as I was looking at this, it reminded me of back in the missiles of October. Remember back in the 60s when President Kennedy was in charge and Russia was trying to move into missiles. In a day by day, they would monitor the events that were taking place and how close the world came to a nuclear war. Now, I won't put this in the exact same light as how devastating that was. However, in the light of prophecy, we need to understand that what is taking place is setting up the scenarios that will usher in the return of Jesus Christ. God says to watch ye therefore. Now, most of us who have been in the church for years, and if you're new and you're the first time coming and visiting our church, you may not have been aware of some of these events. But Jesus Christ tells us to watch ye therefore. We in the church have been conditioned to watch. The problem is we're conditioned to watch limited to the amount of knowledge that was given in the past. For example, when you look at world events, what are we looking for? One of the things we always look for is wars and rumors of wars. Well, you can go back through the history of mankind and you can find that was taking place, wars in almost every generation. However, in this later time, they seem to be escalating. We watched, as the Bible tells us, to watch about earthquakes. And you've probably seen the earthquakes that took place this week. And I forgot how many people who have died from it, but they're still recovering bodies from that massive earthquake down in Central or South America where that was at. Famines and pestilence. Well, as people say, well, we've always had that. Now, we're conditioned. Whenever we say, watch ye therefore, these are the things we're looking at. And by all means, we shouldn't give up on that. It says, though, that all of these are the beginning of sorrows. That means that there's going to be more things happening besides what we're just been told we're supposed to watch. We're also told that we're going to be watching the army surrounding Jerusalem, and that's going to take place just before the imminent return of Jesus Christ. The problem is that there's a huge or a vast gulf between those events that we're watching today and the time when those armies actually surround Jerusalem. During those times, you will see the world begin to move, to be shaped and molded into the position where it will need the return of Jesus Christ, or as Matthew 24 says, no flesh would be saved alive. What I want to do today is I want to take you through a day-by-day scenario of the events that took place in the financial markets in the United States, in Europe, and around the rest of the world from August 9th through August 17th, which is basically 7 trading days. Thursday and Friday of one week, and then the Monday through Friday of the week that we just concluded yesterday. The events of that past week should wake us up and shake us to realize the situation that the world is in today in its global mixing of its economies and how it interacts with one another around the world. We're going to look at these events in light of biblical fulfillment. And as God says, watch ye therefore. Wall Street reports that we have 2 major problems: liquidity and solvency. And those basically break down to, if you're in your house, is that I need groceries, but I don't have any money to go buy them. Worse than that, I don't have enough money to pay my bills down the road. So a person in their home is saying, listen, I'm not very liquid because I can't go buy my groceries, and nor am I solvent because I can't go pay my bills. That is the situation that Wall Street says the United States is in. Well, that's pretty simple. How do we get there, and how do we get out? Better yet, what has that got to do with what took place in the last 7 days? Now, let's back up a second. It was 1 month ago, or 4 Sabbaths ago today, I delivered a sermon. It was called A Lying Spirit. If you didn't hear that sermon and you weren't here, we should have it out on DVD very soon, at least by the Feast of Tabernacles. So what I want to do today is I want to pick up on what we said just 1 month ago about a lying spirit and the situation of what Wall Street said and the euphoria. Now remember, this is a month ago today. The euphoria, how we're going to be hitting the 18,000 and everybody on Wall Street was throwing parties and they're breaking champagne because we just broke 14,000 and there's no end in sight. 1 month ago. So in a sermon I brought out at the beginning, and you may remember this, Herbert Hoover in March 4th, 1929, in his acceptance speech, says that we in America today are merit to the final triumph over poverty more than any other land, because back then, right after World War I, the United States had experienced 10 years of prosperity. It began to help the rest of the world recover from World War I, and the United States was sort of gloating that we were on the cuspice of the leading edge of bringing about the final end to poverty. Notice the date, March 4th, 1929. He went on to say in his speech that in large view, we have reached a higher degree of comfort and security than ever existed in the world. And that was true, and as it is true today. Now, if you'll notice what I just brought up on the screen, right after he made that remark, March 4th, 1929, just a little bit over 6 months later, after we had just boasted that we had just seen the final triumph over poverty, the United States has the stock market collapse. 6 months later, after we're touting how great we are as a nation, Irving Fisher, just days before the collapse, the stock, he states this. Now, Irving Fisher, I'll tell you who he is in just a second, states, stocks have reached what looks like a permanently high plateau. He made this announcement just before, within days of the stock market collapse. Irving Fisher was an American economist who set laws in place that help govern Wall Street and how stocks are developed and how you use these trading systems to grow, and his systems are still in place on Wall Street today. He was the developer of many investing equations, and many of the equations that are used now are used electronically. And some of those equations were tested in the last week and brought about a buying trigger mechanism which helped restore the Wall Street on one particular day, and I'll come into that just a little bit later. That was Irving Fisher, and if you go back and you study economy, you will find that he is one of the leading economists of the century. Just 5 days after Irving Fisher's statement, these pictures were taken. Right after he said, we have reached a permanently high plateau in our economy. Just 5 days later, those pictures were taken. Now, remember the condition of America. We can all look back in history. Some of our parents and grandparents probably tell us about, and you might remember, growing up, telling about how bad it was during the Depression. Consider human beings and how they were willing to sacrifice and how there still was a spirit of trying to do what was right. Consider that to the nation we live in today, and the self-direction that people live in today, and how the greed and how I'm going to get for me, and how it's not about the rest of the world and not about the economy, it's not about anybody else, and how brother actually physically turns on brother and they're killing one another. And look at what happened with Katrina, and how people turned on one another and killed one another for water or for food, just for survival. Look at the mentality back then and consider where we're at today. The parallels are obvious of what we're looking at in the stock market. And I said a month ago that Wall Street was lying to us. You might remember that. No matter what they were telling us, they were lying to us. The world and the economy was not in that shape as they claimed it was. Now, where did the market collapse that was almost right on the verge? I'm going to tell you how serious it got. We'll go through it day by day in just a second, but let me give you the background. This began back in 2006, in case you're not familiar. It began surfacing. It'd been out there for a long, long time. You cannot live on debt, not make enough money to pay your debt, while your debt continues to increase and think you're going to get by. It just won't work. Sooner or later, somebody's going to pay the piper. It began back in 2006 when it began to surface that the subprime mortgage and the financial crisis referred to in the sharp rise in foreclosures. And we've said that how bankruptcies were increasing and how people's homes are being turned in. And up in Michigan, they're in really bad shape up there. Where where it used to be, a lot of the core plants were now have moved to Canada and to Mexico. And they said people are simply just shutting their doors and walking away from their homes. And there's nobody there to even buy them. There's nobody even there to buy them. They're just walking away from their homes. So that the subprime mortgage market began in the United States in 2006, became a global and financial crisis in July of 2007. Rising interest rates increased the newly popular adjustable mortgage, and property values suffered declines from the demise of the housing bubble. Let me explain what that is. Back in 2001, when the United States was going through a huge recession, of course, that's what I call it. They didn't call it that. They said we were just having some tough times. That the United States pumped billions of dollars into the economy. You might have gotten a rebate check. Well, then they began to lower the interest rates, where it made it affordable for people to borrow against your equity in your home. And practically everybody was doing it. Well, back then you can get a 1.5%, 2.5% interest on this highly popular, as they called it, variable mortgage. And so what people were doing is they were beginning to borrow against their homes, while at the same time there was a housing bubble where your home, and in fact we're trying to fight it here, is the prayer announcement says, is that if a home is worth $2,000, the government's saying, if the government says it's worth $200,000, your home may be only worth $50,000, so they increase taxes. Well, that wasn't what's taking place around the rest of the country. They were trying to say that a home that was actually valued at $200,000 was really worth $400,000. So that when you borrowed your money, you can afford to pay a note on $400,000 equity, and you took all that money and you pumped it into the economy to keep the United States and the economy going. Now, meanwhile, the home isn't worth that much money. Inflation begins to set up because they got so much money being pumped out, is that they have to draw it back in. How do you draw money back in? You raise interest rates. So now then, people who have a home that really isn't worth $400,000, they're paying a note on that, not 2%, 2.5%. Now it's 7% or 8%, in some places even 10% if you're high risk. So if your note was $300 back then, which was manageable, now your note's $1,000 or $1,200. You can't pay it. So then what happens is the foreclosures begin to set in. The banks can't sell the foreclosures because everybody's in the same boat. Now we begin to see the subprime, which hits first who? Those who are less stable than others. So the subprime means is that I don't have a AAA rating, so I can't go to this bank and get prime. But there's somebody out there who's willing to let me borrow at a higher interest rate. Now you would think that that would be just the opposite. If you can't afford to borrow here, how can you afford to pay that? Well, that's the way our world works. Take advantage of those who can't, right? Stick it to them while you can because, you know, I'm going to get mine. I'm going to make it work for me. Well, it backfired. It began to backfire back in 2006 as the subprime begins to rise and saying, we can't pay our bills. Meanwhile, the stock market saying, everything's fine. The global economy is doing great. Best thing we've ever seen. In fact, one economist says, I've never seen the world in the shape we're in today right before what happened, what I'm about to tell you, in the last 7 trading days. Never seen an economy doing so well. Well, I don't know what he was looking at, but it sure wasn't the facts. Because they don't look at what's going on from God's point of view. They look at it from a worldly point of view. Put off till tomorrow. I don't have it today. We'll take care of it down the road. Now, that is how our country operates, by the way. The United States is bankrupt. It cannot pay its bills. And so the interest alone on our debt is more than we can bring in our gross national output. Now, I'm not making that up. Everybody out there will tell you that. And the reason they haven't foreclosed on us yet is the rest of the world still needs us. But it's going in further and further to the state where they're becoming self-sufficient to where it doesn't need the United States. And we will probably see that in our lifetimes. Now, let me go on. Rising interest rates increased the newly popular adjustable mortgage rate, and property values suffered declines from the demise of the housing bubble, leaving homeowners unable to meet financial commitments and lenders without a means to recoup their losses. Now, there's no knowing. There is no way to know right now how bad it really is. We were told a month ago, when things began to get real bad and they hit 14,000, that the subprime mortgage problem was contained. It didn't get anywhere else. Hogwash. And I said, they're lying to us. It cannot go into subprime without affecting somebody in the prime. And that's what began to surface in the last few weeks. Warning to America, July 18, 2007. On July 18, 2007, just a couple days before we gave that sermon, a lying spirit. Ben Bernanke, the Federal Reserve Chairman, Ben Bernanke, warned that the continuing doldrums of the housing market, particularly the collapse of the subprime mortgage sector, will dampen economic growth. Now, that was on the 18th of July. Immediately, the powerful financial markets came out to claim that the financial markets were contained. No problem, people. We don't have a bit of problem. The financial problem is contained. To the subprime lending institution, there was nothing to fear. Same day. I watched on television one time, and they had these 4 economists come up. And in it, they would begin to question about the finances. And 3 of them were raising, almost like throwing a party about how great it was. And the one man on there says, we're not in good shape, we're in really bad shape, and it's going to hit us if we don't get a grip on this. They turned on him like piranha and began to mock and to ridicule, and he couldn't get a word in edgewise, and they ran out of time. Ben Bernanke has been trying to warn this nation that we are in trouble. In January 29, 2007, in our newsletter that was put out, it was our February, just this past year, I began the letter with saying this. This was back in February. Another stern warning falls on deaf ears. Following the departure of Alan Greenspan, chairman of the Federal Reserve of the United States, the newly appointed Fed chairman, Ben Bernanke, wasted no time to warning this nation of impending collapse. This was back in February, as soon as he took over. I wrote that in a newsletter, and there was somebody on our mailing list took huge offense to what I was saying, said all you people are alike, just gloom and doom, and that's how you're getting all your money, scaring people to death, and that's why you're living on such a high income. Of course, he didn't know who I was as far as what my income was. But he said, take me off your mailing list. Ben Bernanke was warning back then, and I saw it live when he said it. And the man said I was making it up, and I went on the internet, I made a copy of his complete speech, and I emailed it to him, and I highlighted the section and said, read it for yourself if I'm making this up. Never heard back from him. So we did his wishes, we took him off the mailing list. Ben Bernanke wasted no time warning this nation of the impending collapse of the American economy. In a Senate hearing, January 18th, Bernanke spoke in frank and bold terms of the economic conditions of the United States. The reaction seemed almost to ridicule his remarks as overreactionary. Overreactionary. I went on to write, early in Bernanke's speech he stated, we are in the calm before the storm. He said it. The man's got his pulse on the finances. That's his job. He followed in the footsteps of Alan Greenspan. Now, Alan Greenspan basically would say the exact same thing, but he would take a long way to say it, and he was very polished. And when it was finished, you'd have to sit back and say, what did he say? And he would still give the same warnings. Bernanke was bold and right to the point. He didn't pull any punches. And so people began to mock him and to ridicule him. He then went on to say that the present economic growth is not enough to solve the impending economic collapse. He's been warning. And I'm telling you today in this sermon that even though it may have been averted, the economic collapse yesterday, and I'm going to show you how close we came, we are not out of the woods. And there is no way, short of Jesus Christ coming back to this earth, that the United States can pull itself financially out of the situation it has gotten into, because it will not repent. It will not repent. And because it will continue to go on and lie to the public and deceive and begin to twist, pervert, and make every excusable claim they can think of, the United States will not pull itself out of the financial position it has gotten itself into. And the Bible says so. The Bible says so. He went on to say, without fiscal reform, meaning complete overhaul, the economy cannot be sustained. His very first speech, he warned the United States. You want a witness to the United States? Talking about the two witnesses? You couldn't get much better witness than this, to tell the United States where it's at and where it's going. July 19th, the day after, Bernanke warned the United States about its problems in the subprime area. The day after, Wall Street said, whoa, no, we're doing great. We're doing fine. There's no problem. It's contained. It's contained. The Dow closes the day after at a 14,000-point high. Everybody began to throw its parties again. Said, now, we're going to, and began to mock because they said, he warns us yesterday, look, we go up again today. News headlines, the Dow Jones Industrial Average up 82.19 points, just over 14,000, finished about 82 points or 0.6% higher, ending at 14,000.41 after straddling the key psychological mark during the session. It went back and forth, and for the first time it closed over 14,000. Investors cheer IBM and other upbeat earnings while they overlook Bernanke's testimony in the Fed minutes. Just the day before, they completely forget about what he said and mocked him. Now remember what happened back in 1929. President Roosevelt said, we are in the great shape. The Economist said, we have no problem, we're at a permanent high. Just days before, it's beginning collapse. One broker stated, and I heard this live when he said it, oh yeah, we're going to hit 18,000 in the next 18 months. Can you imagine the inflation that would have caused to go up another 4,000 points? That would have been absolutely crazy. But that's what they were touting at that time, July 19th. Now, how many people remember the book from World War II, At Dawn We Slept? Anybody here remember that book? If you haven't got it, you ought to get it and read it. It's about what took place just before the attack on Pearl Harbor. Most warnings to the American people went unheeded at that time. Japan caught America sleeping. Now, I can't help but to imagine that's what we're going through as a nation today. America seems to just want to be asleep. It doesn't want to pay attention to what's going on. It doesn't want to wake up. It doesn't want to face its reality. While we slept, August 9th. Now let me begin the 7 days. I woke up Thursday morning, August 9th, flipped on the news, began to watch. I seen the Dow was at a pretty low point, and the minutes had just been opened. So I flipped onto the financial network to see what's taking place. And if you want to find out what's going to happen to the world, a little bit of information for you, follow the money. Follow the money. The money will track to where the power is, and where the protectionism is, and where the nations will begin to not trust one another. There's two things that's going to bring about nuclear war. God says there's a possibility of nuclear war. I won't say we're actually going to have it, but it sure looks like there's going to be one. Two things: finances and religion. And you can mark your dollar that every time financial situations precede the religious. Every time. Except in the little homes where these terrorists are. August 9th, while we slept, something took place. European stocks began to tumble as the ECB, or the European Central Bank, shut down 3 major financial institutions as being insolvent. 3 of their major institutions. For us, that would be like, Chase Manhattan, or you think of the big names. Shut them down. They don't have money to pay their bills. That sent a panic. We're asleep. Remember, Jesus Christ says he comes like a thief in the night? When world events hit, mark my words, mark the scriptures, forget about time. Follow the scripture, you're going to know it's going to happen quickly. Almost as if we're asleep. News headlines: ECB provides emergency funding in the first day, 94.8 billion, would it be, euros. The financial markets in Europe locked up so tight, so quickly, people pulling money out because they couldn't figure out what was going on. Why? Because they were told a lie. Because we're doing fine. There's nothing wrong with the world. Now, all of a sudden, here comes the central banks in Europe, shuts down 3 of their major systems and said, listen, they don't have any money. They can't pay their bills. Shut them down. It was a temporary because there was no money. People around the world began to panic. The central bank said if we don't stop this, the collapse is going to happen immediately. Immediately they take in a fund, or they lend out $94.8 billion before you and I wake up the next morning. While we slept, by dawn, before the stock market opens up in America. Some of those institutions have banks in America, have ties and businesses in America, shutting down businesses over here. Because why? We're all intertwined now. The U.S. reserves are up all night. The Federal Reserve, as we slept, the Federal Reserve had already decided to take the same action to avoid panic in the U.S. By the end of the day, August 9th, day 1, it had loaned out $24 billion. Yeah. As someone in the audience you might have heard them say, where did they get it from? They print it. They make it. They don't have it. They just make it. And they put it into the market. The guy who gets the money says, I don't care where you got it from. Give me the money. And they pay their bills. They keep businesses afloat over here. They keep businesses afloat. This was just the beginning. Right after it's contained. Right after there's no problem. Right after, well, we're going to get 18,000. Things are great. Isn't it wonderful? Let's throw a party. We'll pay the bills tomorrow. Thursday morning, Dow sees the second worst day of 2007. This time it's different because this time it affects the whole world. There was a day that was worse than this, but it was a sell-off. It wasn't a situation that causes a collapse. This day began to cause a collapse. The infusion of billions of dollars into the credit system was not enough to resolve the financial fears that were now surfacing. Credit fear sent stocks tumbling, with the industrials posting its biggest one-day point loss since February. The Dow fell that day 383 points. This is after the United States and the European markets put in almost $100 billion to keep it afloat. It was just beginning. Friday, day 2, the slide continues. All the markets around the world now begin to absorb the fall. Most follow suit to keep the markets afloat. That means they're having to put money in. That means they're lending to institutions who don't have money to pay their bills. Otherwise, they shut them down. For example, if you shut down the housing market, look how far out it goes. You have the hundreds of thousands who actually work in the markets. You have the thousands who actually work in the loan institutions. You have the people who work at Home Depot and at Lowe's. Then you have the plumbing, the electrical. You have everything that's associated. It don't stay in subprime. How could anybody believe that? And so when they said it's contained, they lied to everybody, and people didn't pay attention. They wouldn't follow, and they said, oh, sure, no problem. On Friday, the ECB added another 64 billion euros. The 94 the day before didn't do the job. The money was still seizing up. Press release. This liquidity, now they're trying to get a smooth transition. The liquidity providing fine-tuning. I love the way they word that. The liquidity providing fine-tuning. We're just trying to fine-tune a problem. Nothing serious. You just put up $150 billion. What do you mean it ain't serious? You're fine-tuning. It's kind of late. It's like the cattle when it gets out of the barn, then you go shut the door. You got a problem. Nope, it's fine-tuning. I love that. That's their press release. The fine-tuning operation follows up on the operation conducted yesterday and aims to assure orderly conditions in the euro money market. Nobody believed it because it didn't stop, but they tried to stop it. That day, the Dow fell another 147 points the next day. The Feds on Friday in the U.S. By the way, did you hear that? It's amazing how the Feds can come up with all this money and lend it out all of a sudden, and nobody knows about it. The Feds added another $38 billion, $19 billion in the morning, didn't stop the slide, had to do another $19 billion in the afternoon to keep institutions open because the money was drying up. They did this in 2 separate operations on Friday, adding to an effort to stabilize money supplies. Now what happens is this. Because everybody thinks the market's doing great, they have what's called options. And then you can actually borrow money on stock. You don't have to have it. You know, you can trade, and they'll say, well, you know, and I'm going to give you an open line of credit. You can buy all this stuff, and it's called a margin. Now that means that if I've got $100, I can spend $500. And some people who have great credit means that if I got $100, I can spend $1,000. I don't have to pay for the $1,000 because I got good credit. It's called margin. All these companies were out there on margins. Now, do you remember me mentioning in that sermon? At that time, it says that, let's see how I word that. It talked about we're in great financial shape. We can pay off next time. We don't have to pay it today. In other words, when I sell the stock, I can buy it on margin. I don't have to pay for it. I can sell it. When I sell it, then I'll pay back what I borrowed. What happens when the stock now that I bought $1,000 worth is now only worth $50? Because that's what's happened. The market began to drop. All those stocks that I bought on margin that I don't have money for, the banks are saying you owe me $950 now because it's only worth $50. The institutions who said, well, we don't have that money because they've been buying back. Remember, they bought back their own stock, and they're going to buy billions of dollars worth of stock. Where did they get the money? They borrowed it. They don't have it, so they buy all this stuff. Now they're in debt to the financial institutions. This has nothing to do with subprime, but it's extended because all the money was there in the bubble. Now the bank says, we need our money because we got to go pay our bills. They call the loans. For example, you owe $100,000 on your house. They have a right, nobody usually does it, but they have a right at any time to call your loan, by the way. Now, you got to come up with $100,000. Well, I'm only making $300 a week. Well, it's too bad, I need the money. because I got bills I got to pay. That's how the thing began to bubble. So everybody's calling in their money. There ain't no money. So then you think, well, then gold will go up as the market goes down. Wrong. All gold, silver, platinum, and all your commodities, they began to drop too. Why? Because they're liquid. And all the money I had in gold now is being sold so I can pay my margin calls that I don't have because I bought more than I could afford. And I bought it at 1,000, now it's only worth 50. So I got to pay for those losses. Now, you begin to see how the bubble begins to work. So now they keep putting money out there because they don't have enough money to pay all their bills. They continue to add liquidity. Europe alone put in $234 billion, in 2 billion euros, in a matter of just a few days. They had to come up with that money. Monday, August 13th. The reports early in the morning show that the outlook for new home sales continue to worsen. The NAR said that new home sales will likely fall another 19% this year. That means the economy is not going to recover. It's in bad shape. Dow losses continue on Monday. The ECB begins a swap out with U.S. dollars because now the rest of the world says, yeah, you come up with $234 billion. How are you going to pay for that? You don't have enough money. The United States says, okay, I'll tell you what we'll do. We'll swap out some of our dollars for your euros and they'll take our dollars. We don't have the money either. Man, that blew my mind when I read that. So they work out a swap. That wasn't enough. The Japanese central banks began to add funds into the banking system to keep the United States and euro afloat. Now, this is only the third day. This is only the third day. The rest of the world don't know what's going on. You go talk to the general public today, they had no clue this took place. The ECB continues to add euros to the banking system, bringing their total to 234 billion euros to try to keep their systems afloat. Tuesday, day 4. The Dow Jones Industrials fell more than 200 points, barely avoiding its first close at less than 13,000. Less than a month before that, touting 18,000, they had just broke 14, remember? Press release, 8/14/2007. The Federal Reserve, which has injected now, the United States now, has come up with $64 billion of liquidity into the U.S. banking system since Thursday, said today it stood ready to act again should market conditions worsen. They did. They didn't get better yet. Wednesday, August 15th, 2007. In the last hour of trading, the Dow went from a slight loss, it looked like it was going to hold its own by Wednesday, to by the end of the day, within the last hour, it closed down another 167 points. The index of 30 blue chip stocks closed at less than 13,000 on April 24th when it closed at 12,953. That was the first time since April that it now closed below 13,000, and it continued to get worse. Many companies, not just the housing markets, now are reporting losses and lack of operating capital and doing all in their power to remain solvent. Thursday, August 16th, 2007. At the beginning of the day, First Magnus, which is the 16th largest lender in the U.S., the largest home lender, had $70 billion in assets under its roof, announces, in light of the collapse of the secondary mortgage market, First Magnus will not fund any more mortgage loans. They have no more money to lend and cease all operations from doing any further business. That again sent another panic into the financial markets. Countrywide, which is the largest home lender, announced that it must draw on its entire $11.4 billion line of credit. It had been holding back and had been trying to get by. It now announces it has no money. It's got to go into a credit line to pay off bills, and they're drawing from an entire $11.4 billion. Fears loom. There's no way to know that there won't be enough to overcome their losses. Financial shortfalls spread across all areas of the markets. Massive selling begins to raise cash and cover margins. Sends out new rounds of panic. The Dow immediately tumbles another 350 points on Thursday morning. Imagine all this is going on. The general public has no clue of what's taking place. This is a prelude. The prelude that if it doesn't stop, it's going to bring down, just like it did in 1929, because many of the laws that protected the citizens from the banking system that didn't allow them to merge to do all their businesses together, those laws changed from 1995 till today. Now the banks can do just like they did back in 1929 when they passed the laws that a collapse could never happen because we got these laws in place that the banking system can't do it. But when that began to change, you began to see mergers. So now the banks are into everything, just like they were back with Wall Street in 1929. Now, interesting thing happens. When the 10% correction showed up, it triggered a buying situation automatically in most of the major systems. Two things happened that day. There is a theory that the Feds leaked out that they were going to drop the discount point in the last hour of trading. The 10% trigger and the leak, which I kind of believe this was happening because they were at the very end. There was nothing else they could do. They done pumped all the money they can pump. Nothing was working. So at this particular point, the 10% correction began a buying in, along with the leak, and before the end of the day, it recovered most of those losses, but it still had another loss. Thursday night, while we slept again, the financial world began bracing itself for a Friday disaster on Wall Street. The rest of the world knew what we did not know here in America. It began short selling. In other words, it would begin if you bought or you would buy a product for $8. It's actually you would sell it for $8. It was with short selling. It works just the opposite as going up. Is if I sold it for $8 and then it dropped, then I can buy it back now at $2. So I make money on the way down. Short selling began to go all over the world. The world began to brace itself for a financial collapse on Friday of the United States. And it was positioning itself to be able to take advantage of that collapse to recover their losses from the previous week. While we slept, that was on Thursday night. The Feds make plans to avert a Friday disaster. Friday morning, day 7. Early Friday morning, the Federal Reserve moves to cut the discount rate by 0.50 basis point, or just under one half of 1 point. That means that now the Feds have showed that they're willing to come in and reduce the interest rates. And when that happened, when the market opened up, the market went up by 300 points within a matter of minutes. Not because everybody was happy with what happened, it's because they had short sold. That means they had to cover their losses as the market went up. They lose money, so they had to cover themselves. This was the statement by the Feds. The financial market conditions have continued to deteriorate. The financial market conditions have deteriorated, and tighter credit conditions have an increased uncertainty, have the potential to restrain economic growth going forward. In these circumstances, although recent data suggests that the economy has continued to expand at a moderate pace, the Federal Open Market Committee judges that the downside risk of growth have increased appreciably. He liked the double talk. While we're still growing, the downside risk has gotten even worse as we're growing. The committee that is monitoring the situation is prepared to act as needed to mitigate the adverse conditions on the economy arising from the disruptions in the financial markets. This is after a week of what I just showed you took place. After the disruptions, this was really bad, what took place. The markets rally on Friday on the Fed's decision, will it work? Now, we bring you up to today. That took place in the last 7 days of trading. What is that to do with prophecy? Now let's move forward now with all this in mind of what took place and where the United States and the rest of the world has gone through. How close did we come to financial collapse? I got one of my things is hidden under there. I'll tell you what that is in a second. The potential for a market meltdown was averted. Jim Cramer, CNBC, August 17th in the morning says that we came seriously close to a potential meltdown. There was a 50-50 chance, had the Feds not stepped in to calm the markets, that we could have seen a market crash. That's how close we came. He wasn't the only one touting this. Now, we think Jesus Christ could delay his coming sometimes. We think because we don't see all the scenarios in place, because we don't see the army surrounding Jerusalem, we think we have time. At the beginning of the sermon, I began to talk about all the things we're told to watch for, and then I said the army surrounding Jerusalem. There's a vast gap of difference between those two. We're in that period right now. We're in the position where the United States and the rest of the world is moving dangerously close to being so weakened that we're not going to be able to recover from a collapse. Now, what you don't see here is that the Goldman Sachs spokesman says that the events of the